Welcome back, traders. In today's breakdown, I'm going to walk you through a clean and high probability setup based on pure price action and smart money concepts. Watch carefully. Every step is marked on the chart so you can understand why the market moved exactly like this. As the market opens, we can see price trending downward before reacting strongly from a discount area. Now notice this strong bullish push. Right here, the market breaks above the previous swing high, giving us a bullish break of structure. This break of structure confirms that buyers have stepped in and the market wants to shift to the upside. This is our first big clue that the overall direction is turning bullish. After the bullish break of structure, price starts correcting. Zooming into the low time frame, we can clearly see a bearish low time frame change of character. This is important. Even though the higher time frame is bullish, this temporary bearish change of character shows the retracement phase. This tells us that price is pulling back to pick up liquidity before continuing the bullish trend. Now watch this move carefully. Price drops down and sweeps the previous lows, grabbing all the liquidity sitting beneath those equal lows. This is the liquidity sweep. The market intentionally drives down to trap sellers and collect enough orders from the downside. Once the liquidity is taken, price shows immediate bullish reaction. This confirms that the sweep is valid and the market is preparing for a reversal. After the sweep, price returns into our marked point of interest. This area is a strong demand zone aligned with the imbalance and order block on the chart. The point of interest acts as the exact location where institutional orders are resting. You can see the market tapping this zone, rejecting it cleanly, and giving us confirmation that buyers are stepping in again. Now that price reacts from the point of interest, our next destination becomes the buy-side liquidity resting above previous highs. This liquidity pool is the logical upside target because that's where the market will move to fill orders and hunt stops. You can see this clearly highlighted in the chart. So, after confirmation inside the point of interest, we take our buy entry. The stop loss remains below the sweep, and the take profit is set directly at the buy-side liquidity zone. From here, the market pushes upward exactly as expected, tapping into the buy-side liquidity and completing a textbook smart money trade. A clean, high-probability setup from point of interest to liquidity, executed perfectly. If you want more breakdowns like this, make sure you follow for daily SMC-based trading lessons. See you in the next chart breakdown.